Hey, what's going on, guys? We're doing a little bit of trade review over the last week. It wasn't a crazy week for me, it wasn't a bad week. It was kind of just a mediocre week. I ended it off strong with an NVDA short today. We've been talking about this short on the LPSY, and what that means is just your lower high that is developing after the UTAD, right? And this candle right here is a major footprint. It could obviously be a UTAD, right? So regardless of whatever kind of scares you out of this thing, all this really was a sorry about that. All this really was here, guys, was an inside bar off of the uh, imbalance right here, right? We had a major imbalance where if you guys go into your hourly chart, you'll be able to see how this was a big time NWOG essentially from Friday into Monday, and then they capitulated it through on hourly capitulation. Obviously, as we can see here, guys, these two trading sessions back to back, if you're looking at like your candle spreads, your volume and whatnot, the open as well as the afternoon action happening here was not obviously anything too strong, right? You guys got to think, I mean, they were incrementally selling this thing throughout most of this day. As you guys could see, the hourly candle had a decent wick behind it, and then they pushed it back up into new highs on that day. And then it obviously never closed above where the early morning resistance was at. Then we got a gap down, and then the same exact type of thing happened, right? So that does not invalidate the fact that an LPSY could happen here. And if a lower high was coming on the chart, it was going to be within this green box 100%, right? There was a slight chance it would have happened off of 140.76, but that's just more of a higher time frame level to think about. And there was really no signal off of that level, actually. So we go into the previous parabolic short model that we talked about here over here, and we actually compared them in a very similar way, right? This was a lower high after the UTAD, big liquidation on this hourly candle. We talk about bar by bar imbalances. For the people that have been in here for a while and already have the YouTube videos, the bar by bar imbalance concept is obviously very shown right here within this NVIDIA hourly chart. And we go over all the way back to this previous parabolic short. It was an overnight gap that extended up a little bit higher and then obviously got the capitulation through. And we got our lower high right off of that area. And then that's actually what started the tape flipped into a recorrection down at the bull gap for August 8th or 5th or whatever it was. So really ugly looking action here today on NVIDIA. And what I did was I sized into some swings with a little bit of time once we started to lose the previous day close, right? So I wasn't really too sure about this, but I wanted to wait for confirmation on actual slippage beneath that area or get some sort of first lower high for the day, right? So we had this really weak opening. I wasn't really paying attention. I was more and less just worried about getting out of my BA position. I had BA March calls. I just typed in March. If we go over to BA, this was a really nice recovery, but it did gap down and obviously pushed back up into 180, which was my target. I got to scale off of a lot of extra BA contracts today once that happened, but so that's why I didn't really pay too much attention to this lower high, right? However, we did confirm the lower high, and then that's what led to obviously this thing cracking the current low a day and losing the previous day close, as well as basically losing all of this range in terms of smaller time frame progression levels. This would be one of them right here. It's a much bigger one, and this gap was already pretty much fully filled, but we couldn't obviously base on top of that range, which we tried to do off the open. That then led to a failure and obviously a break and base beneath that previous attempt, right? The attempt being right here, and then the break and base and loss of all of that being right over here, right? And we also did get a really nice lower high that was respecting the opening print, right? So this was all an area of valid execution. And then what I actually saw, and we'll go into the Discord chat and talk about this one a little bit more. But what I saw with that one, guys, was actually a few things. Let me. I'm sorry, I have to find it in the Discord. Fool me one time, shame on you. Fool me twice. Okay, so we go over here, and sorry, I had to find it. Alrighty. So this is my live analysis page that I talk about in a little bit. I don't really share too much information within this page other than basically being able to help your eye out a little bit more in these intraday executions. However, what we were looking for was we were looking at this is where I was talking about everything. My open trades being Disney, McDonald's, Nike, BA. Only got runners with the BA and started with the McDonald's. Short NVIDIA that I opened today in the upper gap imbalance wasn't a great entry, but I'm buying this, minimizing risks until I find that nasty LPSY, third higher high distribution, right? So we go over and we take a look at that. That was actually at 10:45. So I executed a little bit before 10:45, but this was my smaller expiration trade. And I was, like I said, I was buying into this break and base of the orb low, as well as a confirmation of a loss of the previous day's close, right? And this is all area of price in which obviously I would be looking for some sort of LPSY on a higher time frame, right? This is a smaller and higher time frame read. So we take out both previous day highs, right? So this was a previous day high, this was a previous day high, and we put a big fat failure with a strong seller ask that closes beneath both of these days' previous highs, right? And there's a decent amount of volume behind that. And if you guys go into the 15, you'll be able to see how there was a decent bit of volume traded consistently throughout most of the morning. So we know that there's something going on here, right? These were not strong days. We have a lot of gaps to fill beneath us with an external low on our weekly action being into the gap sub 143.67, right? So that would be essentially my first target. So that's why I scaled off most of these a little bit too early throughout the afternoon session, but I just wanted to get in to a win, right? I scaled out most like 60, 70%. I was probably risking about 20% at total. So we can obviously view that as like a 3 or 4 hour trade. And I'm ultimately looking for this thing to fill the gap on smaller expiration. I thought we could get there today, but I was like, you know what? I'm just going to get a win. I'm not going to get greedy. We don't necessarily know if this thing's going to get a dead cat bounce and completely ruin my smaller expiration. That obviously goes for a retest into the bottom of this imbalanced gap area, and then obviously lower, right? And that little leg there would really toast my position. So that's why I just claimed a win a little too early today, but it was still a nice win. I think they topped out at like 80 something percent. They ran over 100%, but I don't really care. So yeah, that would be NVIDIA. I think that is the UTAD like we've talked about. Previously in this distribution schematic, we had typically with a UTAD, guys, you need to have a lot of things going on here on the a series of legs higher that obviously lead to major sell-offs that catch a lot of people off sides, right? Because I don't know why, but the nature behind your human behavior in terms of how things move to the upside is like they get this peak euphoria moment and they buy into the highs, right? And this was actually on the Jensen speech where they sold off on everybody. So that was the NVIDIA chart, and I still own some swings here from the entry today. I took some swings a little bit further dated just to see if this thing can get a gap down into next week, but I have a break-even stop. I'm not really looking to lose anything on this, and this is where my trade plan has been for the longest time. I tried a couple NVIDIA shorts throughout some of these days. I actually caught one on this day, and then the runners went red, unfortunately, because I was looking for way too shallow of a lower high. And you guys got to think, right? Like there's a lot of liquidity that remains in candles that look like this that have that kind of volume. So when you're down here and sellers can't push it any lower, and you're getting these fake out candles that then lead to gap ups and then nice consolidations there, and there's no seller anymore, it's likely going to the high volume bar by bar imbalance on your hourly chart as well as this imbalance on your daily chart. So I actually have been talking about this to be how it plays out for a very long time. So that's why I don't really like to share everything in terms of like a live entry, a live alert. I just feel like that makes people a little bit more on the lazy side of things. And we'll talk about the bid being spoofed here in a moment, and then I'll go on to the next trade. So this is NVIDIA. I talked about the 145 bid being spoofed. Cracked. 145 is cracked. NVIDIA short working super well. And then I was like, you guys know how to read a spoof? I obviously got no one to reply to me on that, and I'll have to ask later on. But this was a big spot to fail, essentially. All right. So it was 1132, and the reasoning as to why we go take a look at 1132, and we could see how at 11:30, this is whenever things started to push into like this support, right? This is the basically the bigger, bulkier support that we have here on our hourly chart, with also almost that gap level being tested as well, right? We have a big time gap ever so slightly beneath the level at 145. Okay, so what happened was they started spoofing the 145 bid, and I didn't know if they were going to pull it back to the gap or pull it to these previous day lows. However, they were building a bid, and then essentially what happened was the volume dried up, and then we were above 145, and then they just started pulling that bid and just kept pulling and pulling it and pulling it to the point where things got really, really, really sketchy looking. And then that's whenever I actually put a little bit of commentary in my friend's Discord that I'll talk about here in just a moment. But yeah, that's essentially how it works. And then if you guys want, I'll actually pull up a paint, and we'll talk about how you would see that in the order book. And then I'll move on to the next trade. So here would be what I was looking at. The order book was relatively blank, right? But you had an order book, and if you guys have watched anything about the order book, we have two sides, right? One side being obviously your buyers, the other side being your sellers. Well, this side is actually my buyers, but okay, we have, an order here at 130, and why is that so big? We have an order here at 130, and say that's 1,000, say that's 25,000 shares, okay? And then you see another order that's at 130 and 10 cents, right? And that's another 25,000 shares, right? This is the order book. So these are orders that are waiting to be filled, right? These are bid orders. So say at the current moment, if these orders are placed here, say NVIDIA is at 130.50, right? So we have to retrace 40 cents and 50 cents to be able to fill these orders, right? And there's 50K shares that are sitting on this area on the chart at the 130 psych, right? So what happened was I started to see these guys disappear. They were moving back, or they were disappearing. They were wiping out their orders before price actually hit into the order to be able to fill it. And then what happened was a few other 130 buyers were actually filled and absorbed. However, they were absorbed on the time and sales by a market order, meaning one of those orders on the Weeble tape that flashes green. So that led me to believe that everything was being absorbed off of 130, as well as some bigger buyers obviously spoofing on the name. I actually did have a nice little commentary that I talked about with my buddy's Discord. Here, I have to go find it. Here we are, I think. I think we're here. I have to find it. Hold on, I'm sorry. Okay, here it was. Okay. NVIDIA 145 bidder keeps spoofing 1133. Did I put a picture in? Oh, here he is. Here he is. Okay, 14,000 shares and 13,000 shares. 145. 1140. I kept saying that this guy keeps spoofing it, man. And then what happened was we cracked through that order, and then obviously things started to really slip and fail with a lot of volume. And then this is whenever sellers got relatively aggressive. And then what happened was these buyers that were established here off of the 130 range were absorbed, or they got sold through, or they spoofed the rest of them that were trying to keep price above that. And they started to look like there was no bidder replacing the spoof anywhere. Right. So then I was essentially saying, okay, well, we have an external low here, right? We have a gap that starts from technically 143.67 that results in a fill all the way down to 140.76, around that range. So I figured this risk to reward trade could be relatively decent once we see this crack sub 145, especially the fact that there's no buyer that was willing to commit to any sort of orders anywhere else throughout this range, right? So this cracked here at 1150. And then what happened was, dude, where did it go? Oh, here we are. Okay, so yeah, so right here, watch the 145 lot on a video. It's about to crack, about to crack. Sellers got a little bit more aggressive. That was at 154. And then what happened was, yeah, it just cracked. It cracked. Yeah, 1155 cracked. And then we go over here, and 1155 was whenever they started. Okay, they absorbed through all of those bids, and then essentially what happened was the name was bid list. It put in a tight little bear flag, and then there was ask orders now that were actually moving lower, so they were getting a little bit more aggressive, like I talked about in the chat there. So they were placing ask orders that were sitting right above price around here, beneath 145. So sellers were in full control of NVIDIA today. It was a really nice trade, a really nice opportunity. I'm sure I could catch an hourly lower high if I think that this thing wants to be a much bigger move on a much bigger perspective, right? So that's NVIDIA. This is a distribution, in my opinion, and I think that this thing could obviously move down into like 115-ish, 120-ish, maybe even 110-ish, right? So a lot of flow actually came in today as well. Some big player was on the sweeps came in on the 90 puts for like summer, for like June, I believe. So we'll go into the next trade, that one being QCOM. This is another one of my bigger wins of the week. Basically, this is a path of least resistance trade. I'm not even going to talk too much about this one just because I identified the spring, right? And then essentially what happened was we had a flat top off of equilibrium. All I do with a rectangular range like this, guys, is after I identify the spring, meaning a sweep of a low or a breakdown failure, essentially, and then I start seeing higher lows subsequently, all I'm doing is I'm taking upper extreme highs and then lower extreme lows, so from there to there, right? And I'm pulling it over, I'm looking at equilibrium, and that happened to be right off of a resistance. That was also a previous support, right? And there was so much money being built off of this range to the point where buyers obviously could not commit to this range at 165 on the previous consolidation anymore, so they broke it down. And then what happened was they broke it down into a new low from where that previous swing low on August 5th was. So this name was definitely very coiled, especially for the fact that this used to be a really volatile name throughout the beginning course of 2024. And it really coiled up on the weekly chart here. So I figured the risk to reward is really big because volatility can return with how much contraction was on this weekly chart. And basically what happened, guys, was we had a big time failure from sellers to displace beneath that low, and instead what happened was they had a failure of a breakdown beneath that low, and then they started putting in higher lows subsequently, followed by pushes back up into equilibrium, and then we had a high tight inside bar, which led me to believe a path of least resistance was being created, meaning that we already had a lot of tests of the flat top resistance, and if you guys go into the daily chart, you could see how that was a high tight inside bar on the daily. So this was a really nice swing trade. Monthlies, I got like 70% before scaling, I think 60 something, like mid 60s, and then I also got like 100 and I got 170% on some January, end of January's, and then I also got another 60% on some February. So that was a really nice win for me. Now we'll move on to the other one, which was BA. So with BA here, guys, this is an industrial that we've been talking about for a very long time that put in a really nice daily flag retracement after we got this exhaustive sequence of price on these daily candles here with all of these wicks and no true continuation. And what we got was we got a retracement back into this daily bull gap, right, or bear gap that was previously a bear gap for our upside target on the swing trade throughout Q4 of 2024. And then what happened was we got a big time gap down, and then what they did was they pressed it a little bit lower into the bottom of that gap. And what happened here was it was all just like a fake EMA undercut, and then it obviously reclaimed back above, and then we still had that unfilled gap for the upside target as well on smaller time frames. This little hidden gap right here that extends all the way up into 180.72. So I figured when this was building out a daily flag, okay, there's no true seller anywhere within this pullback. We're on really nice harmonic volume patterns. This was also coming from a major footprint of accumulation happening here on October 29th. And if you guys take a look at the weekly or the monthly on BA, this is some of the biggest weekly volume that we've actually ever had within BA, technically since all the way over here in 2020. So that was a very notable area on BA to start taking note of, right? That's volume that obviously gives us a directional read. So I just started sizing in day by day on the bottom of this gap. I almost stopped out on this day. I added some more on this day, and I actually added a little bit more on this day just because on smaller time frames. What this also did, guys, if we go into the hourly, was this was a really nice orb setup followed by a really nice high tight consolidation, another gap up, and then another successful close above the previous day high, right? So that was really nice in terms of just confluence on smaller and higher time frames. And at the current time, this was also a big time hourly / daily support that was trying to be made before we actually had a fake break beneath, right? And it was right off of 170 psych. So BA was successfully above 170 as I was adding into these contracts. This also was basically just a nice little flag break on your daily chart. So that was a nice candle to start thinking about taking some size off of, and even with a little bit smaller of an expiration, I didn't have to trade anything too crazy in terms of smaller expiration, but it was a really nice trade, really nice opportunity, and yeah. So with the other ones, BE, this is just a commons trade, really nice high tight flag, big change of hands, and this was lower high by lower high with accumulative looking lower lows, right? I mean, we had a low that extends from here, right? And then that led to a new low, right? But that new low was obviously a failure to displace beneath the old low, meaning sellers could not break beneath, retest, and obviously drive it down further. What they did was buyers actually stepped in a little bit, piece by piece by piece, into a 3 lower low accumulation, 2 lower lows beneath the first low of accumulation at 1150, right? And then we got record high, actually like back to back, really healthy looking candles here with virtually no wick, right? We can essentially say that this is most of buying and buyer presence from just the weekly and daily candle spread. And from a progress standpoint, guys, I mean, this accumulation was taking place for a very long time, 546 days on a very wide ATR name and only a 15% drawdown from that, right? And then that 15% drawdown essentially failed. They put in a lower high, and then we made a new low, right? And we made a new low a little bit later, but that was only an 11% drawdown from the old low in 106 days. And then they bought it one more time, 100% upside. And then after that, they trickled it back down and they couldn't press it down anymore, right? So that was a full absorption, right? They had a lot of the inventory and control on one particular side, right? And that being the buyers. That's why they were able to rip this thing that high after a really nice 3 lower low on the weekly chart, followed by a higher low. And that was obviously all just through like some sort of big time news, right? But they've been accumulating for a while. That led to a really big markup of plus 60% on the underlying. And then we just got a really nice high tight consolidation. Oftentimes, whenever we see a major move like this with that kind of volume, I talk about a lot of the times how you don't want to get too caught up in like major move, right? Big time gap up, right? And it extends well over the ATR on the name. And it's a major move. With major moves come major consolidations. So I didn't want anyone to obviously chase the gap up and then it trickled its way higher. It needs a lot of digestion, right? It doesn't necessarily need to test into the gap, but it just needs to consolidate and pull back and then just recollect itself and really gather itself for then another rally. And that's exactly what it did on the weekly chart. So that's why I was saying down here, that's whenever I started to look for the calls, and I said these February 25 calls can go back to 6.0 because this could obviously revisit those highs and create new highs above the old highs. And those February calls are sitting at, I believe, 6 something right now. So that is a fantastic trade opportunity there. I cut my calls a little bit too early, but you guys don't have to trade my trade plan. You could trade whatever you would like. Yeah, that would be the um, BE chart. So if we go take a look at the Discord here real quick, this is actually the idea that I was shooting out to you guys. Now 450 should hit 6.0. This was yesterday. BE weekly, really nice. I talked about. But over here was whenever I was talking about these February calls. I'm not a big fan of trading illiquid names like this. The 21st of February, that's a relatively decent amount of time, especially whenever you're waiting for the amount of consolidation on a markup like that. That's worth it. And obviously, there's a lot of volatility within this name, and those February calls are now sitting at, what are those sitting at? 630 actually right now. So this was sitting at 2.0 at the current time. Still 2.0. I kept updating it on, and I was eventually in those, and that was on the second, right? So the second was over here, and unfortunately on the second is off after we had a really nice rally from like $22, $23 all the way up to 26. It popped about 60-70% as a swing trade, and I just sold it off, and I was like, all right, whatever. I could have actually reloaded that though, however. So that was a really nice opportunity for a trade. I also talked about this as being from a smaller time frame perspective, guys. If you guys follow the things that I do and what I talk about, this was also essentially just a 3 lower low accumulation, right? They were obviously rebidding those lows, and these daily candles could not break away from where the previous low was at, right? So they just kept putting in these wicks, and they were slowly bidding the lows while the highs were selling off a bit, and then they started building a lot of the internal base liquidity off of like these ranges up here, like 26. And then they were trying to hold that 26 range. However, as you guys could see, there was consecutive tests off the 26 area, and the reasoning as to why that was is because this was where a previous resistance was. However, we had a lot of external resistance to obviously go test, right? So this was a very, very nice looking chart. The external high was all the way up here at 31.47. We have another one up here at 37. So the upside convexity with a trade like this is absolutely insane. We also do have a gap actually at 30.36, right? So that would be the entirety of the gap being filled, right? And I did a lot of research on this name. I've looked at the chart for a while, and that's why I said these beaten down calls that are sub $200 per contract for February 21st expiration could easily see 6 again and above 6. And they're above 6 right now. So that was a really nice opportunity for a trade there, and we'll go into the next one. The next one being Nike. I had a decent little win here on Nike yesterday, actually. It was 3-week out contracts on the reversal trade. So what this was doing was this was obviously clinging to the 72.71 previous support low. And what happened here was we got a breakthrough of that. However, that breakdown does not matter because this is where I'm focusing, right? This is where the previous accumulation was taking place. This area of price action is actually what filled the COVID gap, believe it or not. That's how I knew the read and the rotation on Nike was happening before. And what I think they're doing is they're pricing in, and they're starting to start some of these like under the hood accumulations that have been building for potential tech distribution and liquidity being taken from the mega cap tech stocks, and then obviously those rotations will show elsewhere within other sectors, right? And sometimes with an illiquid sector or a name where things need a lot of consolidation for the change of hands, it takes a while, right? And I don't know if there was enough fuel behind just this little base from here. Just as we talk about, distribution occurs in several legs to the upside that obviously get sold, is the same way that we talk about accumulation happening with several legs to the downside that eventually get soaked and bought up. We're at a major pivotal area on the trend line. I still have some swings, but this was a really nice trade opportunity actually on smaller expirations once we started to see the hourly break structure as well as that low on the daily chart holding. This was your hourly resistance, and what it did was it kind of just based off of that area for quite some time. If you guys are fib people, you could take the current swing low, the current swing high, use equilibrium as your risk gauge, and we could clearly see how there was a lot of basing action happening here on the Nike chart throughout most of that equilibrium-based area, right? So I took a little day trade with the momentum of this, and it rallied from like $73 above the opening print all the way to $74.50, about a delta and a half on those contracts. So that's a really nice opportunity there for a trade on smaller expiration. However, the more of what I'm looking at with this one would be bigger expiration, further out expiration to think about. Pushing all the way up into 78, 80, and then eventually getting our way all the way up to 85 and eventually 89, right? So we know the risk to reward with the upside targets is there. We know under the hood accumulations have been happening. Obviously, with the rest of the discretionary sector, we've seen some really nice moves from lows. One being Lulu. We had a couple other ones like McDonald's. It's actually another trade that I am in as of right now. It's just a starter, but it's still a nice one. Lulu, McDonald's, we had Starbucks. We had a lot of the different like consumer discretionary names that were showing off really nice rotations that are in similar industries, right? Obviously, like Tesla's in the discretionary sector, but I don't group that with these names, right? Just because we're putting a basket together of like similar industries, right? And sometimes you'll see how a rotation will show within like those particular names. That being Lulu, Starbucks, Nike, McDonald's, right? So yeah, we'll go over into Disney now. Really nice trade here. I trimmed off a little bit of these today. I still own some. I probably should have trimmed all of them. Basically, what I was looking for here, guys, was a kicker candle over 110.33, and it didn't necessarily have to go over 110.33, but we have this much huge time bear gap here that was obviously being controlled for throughout most of this range. And then what we did was we got a huge gap up, followed by continuation with no structural higher low, kind of similar to BE, right? Whenever we talk about a peg, and then just a very unstructured rally higher with no strong higher lows within that gap, right? It's kind of similar to what happened to BE after the markup, and it eventually leads to a lot of consolidation before the secondary accumulation and that secondary leg on your after your markup, right? So this was more of a weekly schematic and respected on the weekly chart rather than the daily. We finally got a really nice momentum candle, and funny enough, it was basically bottoming out right around this Q2 earnings gap that was a major bear gap, right? That was left unfilled and actually untested from that earnings day, right? We never had price action pulling into it. That's why I said I was really bullish on Disney for a reversion back to the upside, hence the fact that we had a lot of imbalance within the chart. Just as we talked about with external highs on BA, we had a 3 lower low. That lower low led to a sweep of this previous low at the COVID low. And then what happened was we got a really nice rotation short term, followed by a major redistribution and a gap down. We pulled back and filled some of the previous rotations earnings gaps that were bull gaps. then that's whenever we started to get these higher lows subsequently from the fill of that gap. I was actually bullish on Disney all the way down here just because we had a lot of gaps for the upside. We had a major gap all the way up into 116. And now what we're doing is we just started developing lower highs ever since filling that gap and digesting properly on our weekly chart. The reasoning as to why I knew this one was ready to go was just because this candle right here on January 22nd was the one that actually reversed the EMAs a bit, and then we actually got our kicker candle that had a lot of momentum behind it after we claimed the earnings candle low, which is essentially the actual bull gap. So that was a really nice pivot right off of the bottom of the earnings candle low, and then it reclaimed the 110.33 previous support level that was trying to hold. However, there was not enough demand to break it through and continue it higher. It needed a lot more digestion and basically just like a refiltration of like giving buyers enough time to get their hands on enough to be able to push it through. So that was a really nice continuation trade here today, and it was an absolute ripper up until we had a small dump within the market, right? So that was a really nice trade, and I was short a name, so it was a really nice like pair trade that worked together hand in hand. And basically, with the rest of the trades on the week, I mean, there was just a lot of short-term stuff. Those were my more of my like bigger trades. I could talk about the smaller trades, but I don't even really want to talk about those just because there was a lot of break-even trades for me this week, and I feel I've managed risk. I've managed risk very well. I had a QQQ short that we'll talk about, and we'll talk about where I wanted to try and short this one from. I tried to short QQQ yesterday, and I bought this off of Equilibrium. So essentially what I was seeing was, remember how I was saying there was no bid on this day? None. I mean, the close was huge. So what I was doing was I was pulling the swing high to the pre-market swing low and starting to look for that discounted entry. And sellers were stepping in on this high, and then they stepped in on another test of the equilibrium. And I sized in twice off of this. Both times were green. I thought we would get the continuation and a bloody close, but there was just never any follow through, and the volume was low from both ends of the market here today. And then we got a really nice strong close actually leading up into the close on Thursday, right? So we got a gap down from data and then a recovery. I thought we were going to get a continuation from the gap down with data off of equilibrium. So this trade over here, I scaled out of shorter expiration trade for a small win. I broke even on my further dated. Again, scaled into some shorter expiration, also a lotto, and also some further dated Februaries. Lost everything on the lotto just because I was planning on losing everything on the lotto. It ran like 70% and then I lost it all. And we also, I had some end of Januaries. Those ran like 25%. I only scaled out a little bit through the stop break even. And then obviously that trickled way back up and eventually started to see the failure. However, what we did was we just basically pushed back up for a double top. And then we obviously bled through today with a lot more volume behind that, right? Actually less volume on the daily chart, but I think there was a decent bit of more volume actually on the sell-off itself, right? These sell-offs were not really too strong. So a lot of the volume actually yesterday also accounted for the close, right? Which I don't really know what that was. But yeah, so that was QQQ. Not anything really too special with QQQ. I tried a couple other shorts throughout some of the weeks. I actually had some shorts towards this range yesterday, and then it gapped down, and I was so pissed because I wanted to short actually on the Thursday data. And then what happened was that gap down never really swept too hard into the gap. But I will say, guys, we did actually retrace into like the bottom of the gap here, and we successfully held that with a higher low. That was also the 618 from on an intraday perspective. So there was no reason to obviously hold too much of a bias to being short. I just wanted to catch a little bit of leeway and then see if I could squeeze in that reversal trade that obviously results in some sort of major breakout failure essentially above these previous lower highs, right? Because if we did have a weak close, right? And this eventually got to close beneath like 527.92, which is this high. That's whenever things would start looking a lot more distributive, and we would obviously pull back into some of these gaps, and it would turn into a really insane risk to reward trade. But it never happened, and it is what it is, and I don't really care. So yeah, I mean, at the end of the day, not everything's going to work out, and sometimes you have to just really manage your risk and understand what you're trading. BA, I already talked about that, but I'll talk about where I rolled my profits here real quick. It was basically just through these two trading days of consolidation on the hourly chart above the break of structure. So this is essentially where your lower highs were at before. From the top, right, where we had that exhaustive phase look, and then obviously we had these lower highs and a lot of resistance being built here off of like 174. We popped through that on a really strong orb continuation on our hourly chart. If you go into the 15, we had a really strong orb followed by a retest, and then we had a really nice close, right? And then basically the next following day or two of trading action here, we had a high tight inside bar, but it was all above this resistance as well as this gap. This is actually a hidden gap on the huge gap down, and that's the bottom of the gap. That's the opening of this trading day right here. So that's whenever I was like, okay, they'll likely claim that it was also tying in with confluence to the daily gap, where we actually had the retracement into the bottom of that and then held that as progress, right? So this was a really nice area to start thinking about rolling profits into that trade and whatnot. So that was a really nice trade over there. LRCX, I actually had commons with this one, and I sold off on a little bit of these today. I bought commons on this progress gap right here after MU reported this was a sympathy gap down with LRCX. We got a big time pop, and then we got harmonic volume retracements on the 6th or 7th test of this resistance. First being here, 2nd, 3rd, 4th, 5th, 6th, and then 7th, right? And then we started getting those harmonic volume retracements. Those were obviously into the MU sympathy gap being rebid once we pulled back down, and then we started developing structure for higher lows, right? Ever since the shakeout down here, right? So higher low, higher low, higher low, and the last higher low. And this was also, you have to contextualize what is this also lining up with on higher time frames. This is a massive level on the weekly chart, as you guys can see, right? So any sort of higher low can be your LPS. That's why all of those higher lows and timing those, especially on smaller time frames with your progress levels or with just any area on the chart that makes sense. We have the path of least resistance model up towards 79.60, and then once you pull back and then you start filling those bull gaps, maybe pulling into some of the areas of progress from where sellers previously had control and then buyers took control. That's whenever you can start spotting higher lows for really nice entries for commons or dated swings. I just took commons here, and I was up about, I was actually filling on this day. I was up like 14% today on the commons, and I shaved off a little bit of those. But I didn't want to take any options just because of the earnings window, and commons have actually been really good to me. So yeah, that would be the trade review for the week here, guys. There wasn't really much more that I did. QCOM, BA, NVDA short, and BE commons, LRCX commons. Those are basically what made my week. And Disney, I guess, was also a really nice gain here today. I also had some Baidu commons. I don't know if I actually put this one out on Twitter. That's why I haven't been mentioning this one. But I'm pretty bullish on China. This is a 1, 2, and a 3 lower low accumulation on the daily chart. If you guys go, or on the weekly chart, if you go into the daily, this was a big time daily support followed by an undercut. That undercut was actually right into an event, right before an event. We had our BOJ decision actually last night, which is a really nice positive catalyst here for this one. And we have gap fill targets for the upside. So I actually have some dated calls on this one in my larger port, not the portfolio that I manage day by day in terms of like doing more degenerate shit. This is more of like my port. And I have an upside target up here above 91 into 93, and then I have another one all the way up into 99. So that's a really nice looking chart there, guys. Really not much more to that one. I think it's one of the cleaner looking China charts. As far as missed opportunities, the only other thing I really missed I was looking at was Lulu. Lulu was a decent swing trade opportunity here. I actually caught the previous dig into this peg, and I started to catch the higher lows from once we actually found a buyer within that peg, given the fact that this was a nice volume increase. And then we got a really nice continuation from like 570, 375 all the way up into 415. So that would be 30. That would be 35. Wait, what did I say? 375? Yeah. Um, all the way up into what? Okay, yeah. So that would be about 40 delta points that I was catching on those calls for a swing. And it pulled back, and then it obviously just had that really nice consolidation off that level once again. So, another trick that I like to talk about with this real quick would just be we have a bull gap for the upside. I have Lulu Commons though. That's what I wanted to talk about. We have a bull gap or bear gap to the upside. We have a bull gap from the downside. This is a very, very old bear gap, right? And we tested into it just by like a penny, as you guys can see. And there was no volume anywhere throughout this range. That was obviously changing the fact that this is very accumulative, right? We obviously had a really nice base here off of 367, right? And then we just got some lower highs after that first initial high that was testing into the bear gap. And that was actually December 9th, right? We never got really any big time volume anywhere throughout this range, right? So a re-roll in those contracts for March or just summer was a really nice opportunity. And aside from that, there wasn't really anything else that I've done this week. So I'm laying low until FOMC, but I'll be a little bit more active with how many trades I'm putting on and actually how much conviction I have with my sizing and whatnot. I put in some lab analysis on what I was looking for with like my heavier conviction trades on BA and some of my common trades that were, like I said, I previously had options on these, but I'm totally okay with taking commons. If you guys wanted to load up on those February calls, I talked about how they were sitting at 2.0. Maybe they'll trickle down into 150, but they're going to revisit 6 before that window. If you guys wanted to trade that, you could have traded it. Even if you were size for 0, right? It's still actually technically a good risk to reward trade if you're size for 0. They're at 2.0. They could go to 6, right? You guys got to think like percentage gain versus like what your loss is. They have a very big potential of going to 6. That's why these peg setups where you get major amounts of premium being cooked on such digestion because people don't understand the auction aspect of this, where things have to really digest that match a 60% move on the equity, right? So, yep, that's basically all there really is to it. I'll hit a scan with you guys on Sunday. I'll see you guys.